If you have a small business or thinking about starting a small business, obviously starting it's very difficult, but also thinking about what happens from a tax perspective can be confusing. So my name is Josh Baldovino. I am a marketing agency owner, also one of Derek's clients. And this is Derek Fujikawa, who's a managing partner of Fujikawa Associates. And Derek, today we're going to break down all the common business owner questions and how they might affect their taxes. How about you give some context, Derek? How long have you had your firm? And obviously, it's also a small business too.
Sure. Yeah, so I actually joined my father with his practice back in 1997. So 28 years now, almost getting close to 30.
Okay. So you've been in the small business world for a little bit. We'll say a little bit.
A little while, yeah.
When do you think it's time for them to actually form the LLC or maybe an S-Corp? And what's the different stages there?
Usually they'll start off with a sole proprietorship just to get things started. And oftentimes that's probably the best way to go, especially if you're not sure that the business is going to get off the ground. Like something called going concern. You want to make sure that there's a really solid going concern with this company before you start creating entities, because entities can be relatively easy to set up, but can sometimes be a little bit difficult to unwind or dissolve. And if you don't do it properly, you could end up paying a lot of money down the road. Say you don't dissolve your corporation and properly and it's still in existence and you forget about it for a few years, you could end up paying a lot in penalties because of that. So really, I don't recommend setting up an entity right away unless some people need to set up some sort of entity in order to deal with certain clients or certain other businesses. Like I've had one client that needed to have a corporation in order to deal with their main client. So they had to set up their corporation. There was no way around that. Assuming that you're not in that situation, I wouldn't say setting up a corporation right away is necessarily the best way to go. You want to make sure that you can get things set up and going first, and then start thinking about moving to a corporation or an LLC.
Okay, so first step might be sole prop. Real first step probably is to book a quick call with the link down below. And then as you think about, okay, there's some legs behind this, thinking about between LLC or a corporation, what would be the
Yes.
difference there?
An LLC really just gives you liability protection, especially if you're just a single member person. It's just a disregarded entity. So it's going to get taxed exactly like a sole proprietorship. So it's not going to give you any tax benefits. It really is more for the liability protection. And they're relatively easy to set up, relatively easy to take down. But yeah, again, it's more for the liability protection more than anything. There's really no additional tax benefit you're going to get with the LLC. The S-Corp does become its own entity. It files its own tax return, even if you're the sole shareholder. And there are some definite tax benefits to it. It does become more complex because it does have its own tax return. And you want to make sure that you're in a certain situation before you move to an S-Corp, unless there's some other circumstances that, like I mentioned before, that may cause you to need that.
So from a high level, what are the big tax advantages to moving to a corporation?
Mainly for small businesses, S corporation is kind of what we're talking about. There's two types of corporations, S and C corporation. C corporation, generally for small business, there's certain circumstances where you'd want to use it, but an S corporation is usually the more beneficial of the two. But usually we look at when your net income gets from anywhere from 50 to about 100,000. So that's your income after all of your expenses, your taxable income. Once it gets to there, then it starts making sense to looking at that S corporation, because then you can start saving some fairly significant amount of taxes by converting to the S corporation. At the lower income levels, it doesn't make as much sense because you're creating more complexity, but you're not saving that much in taxes.
Okay. So that's interesting stepping stones as you move from different phases of the business.
Sure.
What about in terms of mistakes? What are some mistakes that a lot of business owners that you work with kind of fall into?
The biggest mistake is just not keeping very good records, losing a lot of deductions. If you don't keep the record, you may lose a lot of deductions and you're just going to pay a lot more in taxes than you really need to. So that's the biggest thing that I see. So really working with a good bookkeeper or doing it yourself, QuickBooks is a real easy tool to use where you can track your expenses and things like that. But just making sure you stay on top of things is really one of the most important things.
Okay. And I'm sure maybe another question or mistake is deadlines. What are some of the major deadlines for companies?
So the individual deadline, most people know that it's April 15th. It could change a couple days here and there depending on weekends and holidays and things like that, but April 15th. But for any entity that's a pass-through entity like a partnership or an S corporation, the deadline is March 15th. So you have to be careful. So that's one thing to consider if you're looking to move to an S corporation, is you're going to need to get your documents ready sooner before you have all your individual stuff, because that is due on March 15th. Another one, if you have a nonprofit organization, those are May 15th. You have a little extra time. All of these entities, you can file an extension. Generally, it's 6 months. So like for the S Corp and the partnership, that'll get you to September 15th. For an individual, that you get to October 15th. And then, like I said, with the nonprofits, that's November 15th.
Okay. So there are ways to extend it. And I have a note here. It says extensions don't delay payment. What does that mean?
Yes. So the extension gives you an extension of time to file, but not an extension of time to pay.
Okay.
So with all of these returns, you do need to run some numbers to see what your tax liability is going to be, at least get a ballpark number of that, and then pay that in with the extension. Otherwise, you will have some late payment penalties. Even though you filed that extension, you'll have some penalties on late payment. So yeah, so if you just file an extension and put it in and find out that you owe a significant amount of money, there's going to be a large penalty attached to that the later you pay it.
I'm sure that's something that you should be talking to your clients about. And so
Yes,
maybe on that
yes.
same notion, we're talking about
Mhm,
proactive versus reactive tax planning. How do you
mhm.
approach that?
Reactive is just bringing your tax return in, looking at what you have, and basically just taking the historical data and filing a tax return. So there's not much you can do about it at that point. Whatever the numbers are at that point, that's what they are. There's a few things you can do after the fact, but not a lot. So proactive would be taking a look at the year that you're in and planning for that next tax return that's going to be due next April or next March. And then while we're in the year, you can actually do things that will help benefit your taxes come next year. So that's kind of being more proactive versus being reactive and just looking at historical data.
Obviously requires a clear line of communication, which is super
Yes.
important. Okay, another big question I'm sure you get is how do you pay yourself? So like how should a
Mhm.
business pay for themselves?
So it depends on how you're structured. So sole proprietorship, you are the business. So you can take money in and out as freely as you'd like. You could even just have a personal checking account or personal account that all the money goes into. It doesn't really matter. There's no kind of differentiation between you and the business. Once you start creating entities, then it gets a little different, right? So LLCs, not quite. LLC, if it's a single member LLC, you probably want an LLC bank account. Put money in and take it out as freely as you'd like to, because it's really, again, if it's a single member, it's just you. It's just basically the same as a sole proprietorship. If you have a multi-member LLC, then you got to worry about equal payments and things like that. But it's still, you can pull money out and put it in relatively freely with a partnership or multi-member LLC. We get into a little more restrictions are with corporations. So S corporations, again, not quite as bad. You can still take money out, but you just have to track your basis and your kind of retained earnings in the business. Getting into the weeds with some of that, just you have to be a little more conscious of that, but you can still take money out. C corporations are probably the most restrictive, where you're going to have to pay yourself a salary or a dividend to get money out. And there could be some tax issues where you're paying a little more in taxes with that. That's why most small businesses don't use a C corporation unless there's some certain need to do it. Is just because there's a little more difficulty in getting your money out of that versus an S corporation or or an LLC.
Okay. I'm sure that's a question that you ask new business owners now is
Mhm.
just how are you paying yourself? Because you got to figure it
Yes,
all.
yes, yeah.
Okay, just for a fun one is how can you pay family members who are legally helping in the business?
Yes, as long as they're as long as they're working, you could pay them a salary, and it's a great strategy you can use if you have kids that are able to work. You can't hire your 6-month-old son, 6-month-old kid to do something, but have kids that can actually do work, or even if they're younger kids, have them clean up the office or do certain things. You could pay them and actually transfer some of that income to them. And obviously, if they don't have any other income, then they're probably below the standard deduction, and much or all of that payment that you pay them is going to be essentially non-taxable to them, but you still get a deduction as payroll deduction on your tax return. So you're getting a free deduction on that. No one's paying the income on it, but you're getting the deduction. So that is a great tool that you can use, but you just have to make sure that they're actually doing the work and you can document it.
Okay. And documentation is always a key
Yes.
word
Yes.
there.
Yes. That's always important.
All right. Last section here is we're filming this in May. You could be watching this anytime. It's in May. And what if you're behind, like, and you're late or you missed something? How do you correct it?
The best thing to do is take care of it right away. Penalties, interest, all those things, they just keep accruing. So the longer you wait, the more penalties and interest you're going to have on something. File right away. If you're getting a refund, it's not quite as crucial because penalties and interest are based on what you owe. But if you're getting a refund, you're going to want that as soon as possible. You don't want to just give the IRS an interest free loan either, or IRS or states. If you're late on something, even if you owe and you can't pay it, I would say file it, because that stops those late filing penalties. You'll still have late payment penalties, but at least you stop those late filing penalties. And then you can work with the IRS and potentially work out a payment plan, or if you are in certain circumstances, say work an offer and compromise or something like that.
Okay, super helpful. If you were listening to this and you were not 100% confident that you're doing everything by the books, That's probably your sign that you should click the button down below to book a call with Derek. And wherever you are, whether if you're on YouTube or on Instagram or TikTok,
Mhm.
click the link in bio to book a call. But Derek, thanks so
Sure.
much. I mean,
Yep.
having a business is kind of complicated.
It gives you a lot of freedom, right? That you don't have a
Mhm.
boss or things like that, but there's a whole different set of things to consider.
Although your clients are actually all your bosses, so there you go.
Yeah, yeah, exactly.
All right, guys, we'll go ahead and book that call. The link down below. If you have any other questions too, you can leave them in the comments. But if not, thanks so much and appreciate your time, Derek.
Great. Thanks.